I've recently made a bold move, which was to buy shares of AMD, most commonly known as Advanced Money Destroyer. Now I'll explain in this video why exactly I did that. Do I do that because I want to lose money? No. I do that because remember AMD a year ago. AMD a year ago was closer to $200 and everybody was saying AMD is the next trillion-dollar company, AMD is the next Nvidia, blah, 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 right? That was basically the sentiment when AMD was at $200, which never makes sense to me. Now that AMD is down over 30% since then, well, actually more since that peak, back under $200 billion in market cap, now AMD is being compared to Intel. AMD is the next Intel, right? So a year ago, AMD was the next Nvidia, and today AMD is the next Intel, which is quite funny to me. And me personally, I like these types of things. I like to buy good companies that are down where sentiment is horrible. That's usually when I like to start buying shares. You might have noticed that 2025 for me in the public portfolio is the year of the contrarian trade. I've done that with Uber, I've done that with Alibaba, and I'm doing this right now with AMD as well. And of course, I do own Intel, which at one moment in the last couple of days, I was break even, believe it or not, which was quite a nice surprise, let's say. But with AMD, it's now a small position. I have around 40 plus shares, which again is a nice amount of money for a lot of people, myself included. It's over $4,000. For some, it's not that big, but I'm trying to build that position up. And I'll explain in this video why I'm doing that right now and why I didn't do that before, or why I'm not really waiting for the bottom to be in or whatnot. I'll explain throughout this video exactly why. If you enjoy this type of videos, hit all the buttons. We'd really appreciate that. We're very, very close to reaching 80,000 subscribers. Can you believe it? Can you believe it? So I appreciate all of you being here. And if you want to support me even further, do check out the link down in the description and hit the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And later today, we're going to be having the usual portfolio overview release, so stay tuned for that. Now, if we first look at the average analyst price target, by the way, you should never base your investment just because the average analyst price target is higher than the current price. It changes with the sentiment as well. In this case, after the last earnings report, you can see that the average did come down, but it still sits 31% higher than the price we're at today. If we're looking at some pricing metrics, forward-looking ones, because I know a lot of folks will tell you, oh, the PE of AMD sits at 100 plus. There is literally no reason why I should be looking at a trailing PE when I'm looking at AMD. I'm not buying AMD of 12 months ago. I'm buying AMD of today and the future. So I'm looking at a forward PE here of 23.9 times. An EV to EBITDA, 22.9, price to sales, 5.8, price to free cash flow, 76.2, which is high when you think about it, but you also have to know that free cash flow is now starting to grow quite rapidly. And then the price earnings to growth under 1.56, which in my eyes is extremely undervalued. Now, I know what some might be saying, oh, you're only talking bullish about AMD right now because you opened a position. No, you can check all my previous AMD videos. I was quite clear as to why the stock was coming down. And I was also quite clear that I still believe that Lisa Su is an excellent CEO. And even when I wasn't a shareholder of the company, I was always giving them, and especially Lisa Su, a lot of praise. But at a certain price, things start to look extremely attractive. So yeah, I started buying. Now here, if you look at free cash flow growth for the coming years, first of all, in the previous years, free cash flow was a bit all over the place. But what we're seeing right now is that for the last year, free cash flow was $2.4 billion. Then it's expected to grow 181% in fiscal 25, then 16.9% in fiscal 26, and then reaccelerate with a 48% year-over-year growth in fiscal 2027 to reach $11.32 billion in fiscal 2027. Now, why is that important? Well, because if we do a quick reverse DCF, so we plug in AMD, the trailing 12 months free cash flow, that's what you have to use here in the reverse DCF. The terminal growth rate, I just use the 10-year yield. You might agree or disagree. This is basically the explanation. The discount rate sits at 8.42%. Why is that? It's basically the terminal growth rate plus the implied risk premium. You can add some execution risk. That's up to you if you want. Me, it sits at 0. Dilution, I put it at 3%. Now, to justify today's price, approximately, right, with a 0.55 difference here, they will have to grow free cash flow for the next 10 years by 21.6%, which again, if you just look at that number, 21.6% each and every year for the next 10 years, that's quite a lot, right? That's quite a lot. True, but remember, in fiscal 2027, they are expected to generate already over $11 billion. Now, if you look at here, when do they reach $11 billion? Here in the reverse DCF, only in year 8. Only in year 8 do they reach $11 billion, which means that to me, when I look at that 21.6%, totally achievable. Why? Because, well, AMD is expected to grow free cash flow over 100% already in fiscal 2025. And then in fiscal 27, it's expected to grow it by 48% year over year. So all in all, I think it makes sense. It can even grow a little bit faster than that. So it makes sense. Another thing, when buying AMD, it's true that the majority of the focus is on this segment right here, right? The data center segment, right? Them competing with NVIDIA for GPUs and also basically competing with all the hyperscalers and the metas, etc., etc. So it's true. This is the money maker. This is one that's growing fast. This is the one where operating income is basically the majority of the operating income for the company. That is true. But most people forget that there is the other side of the business, the client side of the business, the server side, which is actually doing much better than the data center side. If you listen to the earnings call, the server business is doing extremely, extremely well. I'll show you in a second a statistic as well. So you've got the client side. The gaming and embedded have been dragging the business down, but that should not be a drag anymore later this year, which means we've got another couple of tailwinds ahead of us. We've got the MI350 that will launch earlier than expected. Great, great as well. And then the next year, MI400. ZT systems, that should be approved sooner rather than later. So there are a lot of tailwinds for the business. Now, touching back on that server data that I mentioned, this is from Mercury Data. If you look at AMD's share of server, desktop, mobile, and then total client and total CPU for the quarter and then the year-over-year comparisons, the growth there, you can see that for server, revenue share sits at 35.5%, which is a nice increase, of course, year over year. Not that much, but still a nice increase. That was 31.8% same quarter last year, which basically also shows you that, well, Intel is still very, very strong, right? Because this is basically AMD versus Intel. Desktop basically went from 15.9% to 27.3%. Then mobile from 15 to 21.6%. So all in all, total client went from 15.4% in Q4 2023 to now 23.8% in Q4 2024. As for total CPU, went from 21.5% to 28.2%. So they are definitely making a lot of progress, taking some market share. But for those that still think that Intel is not a real company, nothing burger, sinking ship or whatnot, you can clearly see that they still have a lot of the market, and especially in enterprise. Touching on two extra things here, this was from a Morgan Stanley analyst. So he said the following: ASIC expectations have gone sky high, even though merchants seem poised to outgrow ASICs in 2025. Customization does not change the fact that the chip has to be more productive than a GPU for a given application, which is very challenging. Why is the assumption that AMD's tens of billions of dollars of AI revenue is a show-me story, but ASIC successes are locked in, right? We've been talking about that a bit more in the recent live stream with Jose. We've talked about ASIC, we've talked about Broadcom, Marvell, and all of that. We did say that Broadcom is an amazing company, but we also said that there is a lot of anticipation already baked in. The analyst also talked a little bit about with one of the guys from the hyperscalers, where they basically said, look, we have a team, it's costing us a lot of money. Every time they come out with a new solutions, that solution is still 2-3 years behind NVIDIA. Why is that? Because, well, NVIDIA can spend multiple billions of dollars on a couple of teams working on a couple of solutions, and so they are always a couple of steps ahead of the competition. Now, that said, we've talked about customization, custom chips, and all of that. All of the hyperscalers are doing it. Meta is doing it as well. But as we've been saying, these are going to be specifically for specific in-house workloads. I still don't think that they will be used for third-party workloads, right? When you're going to rent out your data centers, your cloud, what's not, I still think that those will be used by the AMDs and the Intel, those GPUs. Everything in-house, okay, I think the majority of them will start building more and more for in-house applications because, well, they know what's best for them. And so touching back on this one right here, why is the assumption that AMD's tens of billions of dollars of AI revenue is a show me story? To me, yeah, it's true. I mean, the bar is not set that high, in my opinion. I agree. I think we all agree that we wanted to hear an AI revenue guidance for 2025 after what we've got in 2024. We didn't get it. Now, hopefully towards the second half of the year, we are going to get some guidance for 2025 when it comes to AI revenue as they launch the MI350, as we go and exit the year better than expected. Hopefully they will have a clearer picture and we're going to get that number. I think that should be fine. In my opinion, right now, they don't want to give us that number because, well, MI325 started to ramp and then they're moving quite quickly to MI350. So probably there is an air pocket that, well, just customers don't want to take MI325. They want to wait for MI350 and then the MI400 in 2026. So the anticipation of the analysts that were close to $10 billion, maybe they went down a little bit to $8.5 billion for the year, which is not a doubling year over year, came down and AMD was like, you know what, we rather wait and see if we can get a clearer picture maybe in the second or third quarter of the year, and then we'll provide that guidance. Last thing here, and that's with regards to some of the super investors that have bought more shares of AMD. This one is from David Tepper. We talked about David Tepper this week when talking about, well, his bet with the Chinese stocks. As you can see, still a lot of Chinese stocks. The number one position is Alibaba. But as you can see, AMD, he did add another 5.73% in Q4. And so right now, if we look at the stock, it does seem that in the last 2 weeks, it respected that uptrend line quite perfectly, to be honest. Of course, we had first a red candle, but then we ended last week with a nice little green candle, nice little rebound on top of that uptrend line. But of course, we're not out of the woods yet. We're still under the 200, the 50, and the 20-day moving average. Let's see if we can have 2 consecutive green candles. But like I said from the start, I don't really care about these candles. I care about buying good business. And if the stock goes back lower and under it, if we go and revisit the $100 or maybe even below it, that's fine by me. It's fine by me. If I can buy more shares of a company that is doing extremely well, will do better in the future, become more profitable in the future, but the stock comes down and people are even more negative on it, I'll just buy more and more. Yes, 2025 to me is the year of the contrarian trade. So far, so good. Of course, we're only in February, so let's wait and see what happens throughout the years. But basically, this is why I bought AMD, despite me having a position in Intel and despite me having a position in Micron as well, although Micron not really the same thing. But there is that. Great leadership, sentiment is very low, stock is down, the future projections look, in my opinion, still quite good. There might have been some question marks here and there with the custom chips and all of that, but all in all, I think Lisa Su is positioning the company for huge success in the future. You might agree, you might disagree, that's up to you. Anyways, that's all I've got for you right now. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.